Okay, so first off can everyone online hear me? I just want to make sure that you guys can hear me out there before I get started.
Yes.
Awesome. Thanks, Amanda. And Sadie, thank you, both. Awesome. Okay, so we're going to go ahead and get started. I'm so excited to teach today. It's Ignite Session 8, Financial Basics. And so for those of you that don't know me, my name is Rachel, and I am the Market Center Administrator for our office. Keller Williams is famous for their little names. Essentially what I do is I run the operations and financials for our office. So Tim's job as the team leader is to grow and consult our top 20%. And my job is everything else in between. So making sure that the lights are on all the way to making sure that our P&L is in balance with what our budget is, and overseeing and helping our leadership team as we go through with our growth. So I'm super excited to teach today because I am very passionate about financials, and which is funny, in college and in high school, I never wanted to do any sort of accounting. My mom was an accountant, and I thought that was crazy. And why would anyone want to do it? And here I am wound up into this role. So it's pretty funny how it all turns. So the first thing I want to do is we're going to kind of cover what successful agents do every day. So we have over here, make sure. So we can talk about growing a business. So some of the things I think you guys have covered is lead generation, listings, buyers, and then talking more about the real estate. And then you also run your business. So market seller listings, show buyers houses, negotiate contracts, transaction management, vendor management, goals, compliance, attend training and get coaching, and then manage money. So we want to talk today about financially building a sound business while talking about the different techniques through the MREA, the Red Book. So for those of you that don't have the MREA, I definitely would recommend getting a copy. I think you guys probably always got one on onboarding. I have the leadership version, meaning it just has a spiral bound. And so it has little tabs. So it's all marked up, and it's something that I reference almost every day in my role. So I want you to think back whenever you got your license as an agent, and in those classes, did they ever talk to you about how to build a business, or was it more laws and regulations? A lot of it, that's where it is, right? You get your license to know what you have to do or how to stay within the code of ethics, but it's not how do I build a business? And the moment you got your real estate license, well, congratulations, you're now a business owner, which I don't think that's talked about enough. And that's so exciting because you guys have taken this leap of faith and saying, hey, I want to run my own business. I want to be able to create a business bigger than myself. So today, we're going to talk about the MRA models, flow of money, build your future, best practices, daily success habits. So habits for a financially sound business. So the first one is KW is known for their systems and models, right? You hear all the time, systems and models, that's what KW is. But a lot of the times it's what are those systems and models, right? Those can be used as a generic term. And so these are the habits for a financially sound business. So the first is set a profit goal that funds your big life and pursue the activities to achieve it. The estimate, save for, and pay for your taxes on time. Use the proven models and systems of the MREA chart of accounts. Be fiscally savvy by reviewing your financials monthly. Pay yourself a salary and prepare now for a financially secure future. So as you're looking through the habits, I would like to think which for you guys, what are the most important for you? Or what habits have you started? Or where habits do you need to start implementing for? Many agents confuse income with profit. They don't know the difference. They don't save for and pay their taxes on time. I can't say enough how many times I've seen agents come into this business, especially from a W-2 job into a 1099 job, and don't set taxes aside. So when tax time comes around, they get this nice little tax bill of $50,000 and wonder, oh my goodness, who's going to pay for this? Because I don't have the money to. And understanding your financials and not just winging it. You don't plan for a regular monthly salary, and you're not preparing for your financial security. So we won't go through every one in detail, but we were going to cover the fundamentals so you guys have an idea of what to do moving forward. My favorite quote from Gary Keller: money is good for the good it can do. And the purpose of business is to fund your perfect life. So when we talk about creating financial goals, your purpose in life is not to just work all over. It's not, you're not working 9 to 5 for what reason? It's you're working so you can have the life that you want personally and with the people you care about the most. So with profit, you have the money to do good for your family and community. So whenever we set your goals, you become keenly aware how many transactions you need to close to reach your financial. So when we go to the next slide, financially sound or unsound is what we're going to look at. So here's two different scenarios. So whenever you receive a commission check, do you consider that profit, income, or revenue? Do you guys have an idea of what you would consider it whenever you see your commission check? Yeah. Yeah. And a lot of it is it's income coming in, right? But then it's not revenue because you still have to take away your taxes and your expenses. And so when you use your profit, have you guys ever read Profit First? That is a book I highly recommend. So whenever you start a business, the last thing a lot of people think about is paying themselves a salary. And that's the first step you do in this book, and it outlines it. His name is Mike, and I cannot pronounce his last name, and I'm not even going to try. It's very long. However, it's one of the best books whenever you're talking about setting up your business like a business, and you open 5 different accounts, and it includes your profit, your income, your operating, your taxes, and then like a capital or a reserve account. And so whenever the money first comes in, you pay yourself a salary first, and then you divvy it up into your tax account, and then you put money back into your business. So they also have like a Cliff Notes version, like a pocketbook that you can actually carry around of like instead of, if you don't like to read, it's like a quick guide of what's outlined in the book. So I would definitely recommend that. So then as we're going through, when we talk about a financially sound business, when you have a transaction and the commission is 9,000, then your net payment check is $5,760, and then 2,400 into your pocket, and the expenses and taxes are counted for. So for when you guys are calculating average price point, our average price point, and I was writing this down in my notes earlier because it's so funny. In 2020, our average sales price was 196,000. Very high when you think about it. In 2 years, it was like 2017, our average price point was 150,000. This year so far, our average price point is $220,000. So when you think about that, that's $6,600 on average you'll have per closing. And I think as we see the market continue, we'll see that probably it's going to inflate, and we're going to come into appraisal issues and how that's going to factor into that and adjusting the sales price. But every transaction on average is $6,600. And so whenever you're setting your goals, that's where you can calculate how much you need to put aside for taxes. Now, some of you may have, when we talk about the MREA models, so when we MREA economic model, you have your income, expense, and profit. So percentage of GCI, which means gross commission income, that's 100%. So for expenses, it's 30. So if you're an individual agent, you should expect 30% of your commission check coming in to go to expenses. The rest 70 should be profit when you break it out that way. And that is outlined in your MREA on page 157 when it breaks down of how much gross commission income you can produce and what those levels and percentages are. So, and then when we break it down to a commission check, it goes GCI, gross commission income of $10,000, and cost of sales. So there's a difference between cost of sales and operating expense. Cost of sales is the cost of when you produce and have a transaction, that's the sale that goes with it. So it's not a fixed monthly expense. So on a commission check, I'm paying into my cap. I only pay into it as I produce. So that's a cost of sale. Or if you have a referral, that's only being paid out as you produce. An operating expense is a fixed monthly expense. So regardless if you produce or not, you're paying that out. So that could be a monthly fee, your board dues, your mileage, any other expenses. So when we talk about breaking it out and it says 30% cost of sales, 30% operating expenses, it just depends on where you're bringing those through. And I'm going to exit out of this because so I created, can you see this? Okay. So I created this profit and loss sheet. So for those of you that have never tracked your expenses, this is a great way to start. It's very generic and I can send it to you guys if you would like. It's an Excel sheet. So what I did is I broke it out for every month and then I have it broken out between listing GCI, sales GCI, and referral GCI. Again, GCI is gross commission income. So you can go through and you can track for my commission check, this is how much I brought in. And the reason I broke it down between listing and sales is because it gives you a perspective of where your money's coming from. In the MREA, it talks about listing brings leverage, meaning once you put a sign in the yard, people are coming to you to look at the house compared to your buyers and you're showing them. It's more, buyers are more time intensive. You can look at 30 different homes, still not put an offer in on one, and you're still spending that time. In this market, especially listings, people are coming to you. So if breaking that out, it gives you an idea of the money that you're bringing, and you ideally want to be 50-50 on your business as an individual agent, 50% listings coming in, 50% buyers. However, at the beginning, it's probably going to be more buyer intensive. And then how do you work to getting more listings? So tracking this, it will calculate what your total income for gross commission income is right through here. And then when we talked about cost of sales as we work down, this is specific cost of sales. So it can kind of help you of what that is. So company dollars. So whenever you're paying into your split, how much you're paying in each month. And this will also help you track your cap. Same way with royalty. Now, if you are in a larger team and maybe you have a listing specialist or buyer specialist, this is where you could factor that in. And it just kind of depends on the team you're on, if you're on a team. Then the referrals paid out. So if somebody says, hey, I have this client, they're moving to Springfield, I want you to help, and then pay me a 25% referral fee, you're only paying that out if you produce and close on the house. So that would be a referral being paid out. So once you calculate your total cost of sales, you have that here. And then, so the gross profit would be your income minus your cost of sales. So that's still gross before we go through our fixed expenses. Then as we go down and we talk about our fixed expenses, ooh, hello. So we have different fixed expenses, and these may not be true for everybody, but these are common expenses within real estate agents. So an accounting and tax preparation. I highly recommend if you guys do not have a CPA or an accountant to find one because they will know the ins and outs of tax deductions. Like for instance, closing gifts, you can only deduct $25 per closing gift. I know a lot of agents probably are spending over $25. So a way around that is if you find a gift that's more branded to you, it would be considered marketing. Then you could write off the whole expense because that's a whole business expense compared to a closing gift expense. So little things like that would be important to contact a CPA. Another thing I recommend for taxes is to pay quarterly. So through your CPA, you'll look at your taxes of what you paid in last year and projected for the next year. And then they'll divide it out into 4 even quarterly payments. And so every quarter, you'll just send in a check to the IRS and they'll track that through. So you're already paying those ahead of time. And so you're tracking where you're at. Now, if you go over, that's okay, right? At least you've paid it over and you know you have extra to take out. Then, but it's more of a course correction throughout the year compared to one big payment towards the end. No, it's Ignite. But it's Ignite Financial Basics. So, yep. So then again, advertising, internet, automobile, banking, insurance, lead generation, legal, meals, etc. So these are different categories that you can break down your expenses. And what I would recommend, and we'll probably get into it, but I'm just skipping ahead because this is, again, what I'm so passionate about, is if you're not, whenever you read Profit First and it talks about opening the 5 main accounts, that can be very overwhelming, especially starting out. So what I recommend doing is I would open a business account. So, right, you have a business. So once you have set up a business name, you've opened up an LLC. If you haven't opened up an LLC for your business, I would recommend. And then, so you would, let's say you get a commission check. The market center, you have a closing and we will write you a commission check in your name. We can only write the check in what name is on the license. So if you get an LLC set up, that's okay, but we can't cut the check into the LLC unless you go through the MREA on that way. So let's say we give you a commission check and Landon cuts it and it's for $5,000. We're going to write it into your personal name. What I recommend doing is then taking it and depositing it into your business account, checking account immediately. Not deposit it into your personal account, because then you're commingling and you're creating more liability for yourself in the long run for potential lawsuits. By showing that you're depositing it into your LLC, there's different tax breaks too. So creating an LLC, you'll take it, even though it's written in your personal name, you'll deposit it into your business checking. So that's going straight into here. Then immediately, so you have a business checking account, and then you're also going to have a tax account. So a separate account outside of your business checking. This one, I would make it harder to have access to. You don't need checks. You don't need a debit card for it. Essentially, when it's time to pay your quarterlies, you go to the bank and say, hey, I need a cashier's check for this. So that way you're keeping it separate, and it's not easy for you to go in and say, hey, I need some money. I'll just pull it out right now. You're protecting yourself in the future. So once you have these different accounts set up, then you're running your business more like a business. And then through your CPA or an accountant, they'll tell you the percentages that you need. I'm seeing on average, it's about 25% that you'll set aside from your closing check to your tax account. If you always want to be a little bit safe, 30%, 40% is probably way too much. However, I'd rather be safe than sorry when it comes to that. So taking your commission, depositing it straight into your business, and then into the tax. So what that looks like on an Excel sheet is, after we factored in all of our expenses, we're going to take our gross profit minus our total expenses for the month, and that's our business profit. So some other income for your business, it could be profit share, it could be interest, or any other income you have coming in for your business. In your tax account, what I recommend is having, if it's a savings, having a higher interest savings account. So your money is working a little bit harder, and maybe you can get right now with everything being so low, maybe you get an extra $100, but it's $100 more than what you had to start off with. So make it work a little bit harder if you're just going to leave it sitting in that. And so having your tax account being a higher interest earning account. So then you can factor in interest in it. Then you have your expenses. So on this Excel sheet, it will take in what your tax percentage is. So essentially I have it calculated to where it will take your gross profit and times it by your tax percentage. And that's telling you how much your tax you should set aside each month. And then any other expenses in your business, and then you have your net income. So if you haven't started tracking your expenses, there's no better time to start than now. And it doesn't have to be scary. It's just staying dedicated to it and creating a plan. Just like the Market Center, we close our books every month. That's what we call transmittal. And I take everything in. What is our income coming in? What are our expenses? And that's how we profit share. So that's what we look at for profit. So I would do this on a monthly basis, if not weekly, just to kind of see where you're at and course correct as far as expenses go. But whenever you're factoring this in, then you know how much you have to put for your tax account and how much profit you come in. And then next month, you know, okay, if I'm over on my expenses now, what can I do to make sure I'm staying within my amount? And through that, I would just, with your business, open up a business either through your account and have all your bills go through that account, or a credit card. So it's not mingling in with your personal funds. So you can really see, this is what I'm spending on my business. And then if you guys are not tracking your mileage, highly recommend doing that, because that's a tax write-off too. I think there's apps out there. What is Hurdler, I think, is a big popular one. It tracks whenever you're driving, and it says, okay, was this a personal trip or a business trip? And you just let them know if it's a business trip. And then at the end of the year, it will give you a summary of how much business mileage you have. So then you can use that to write it off. So Hurdler, HURDLR. Mm-hmm. Yep, QuickBooks is another great one. And that's another one that you can use for tracking your expenses as well. But if you're not tracking your mileage, go ahead and start now so you can write all that off. So that's why it's important to get a CPA involved, so they can also give the ins and outs. I heard Gene Rivers talk once, who's one of the beginners of Keller Williams and one of the only people that can teach Quantum Leap. So Tim can teach Quantum Leap, but Gene Rivers is one of Gary Keller's top people. And he told his accountant, if you can't help me avoid jail, then I don't want to be in business with you. Like, tell me all the ins and outs of this business so I can move forward and make more money and use that money for other things. So, okay. So then we're going to talk about the flow of money, and we'll go back. I'll get back on track to what I was told to present. Hopefully Nicole's not watching. So the first thing when you create your own business or you start your own business, what's the goal of it? To make money, right? Why else would you be in business if you're not going to make money? So the formula to use to calculate the profit of your business is income minus expenses equal your profit. Just kind of what we went through. So while the formula to calculate profit is important, it's not the end all be all. So I think in page 7 of your guide, there's certain questions that you need to ask and look at your business. So the first question is, how much money do I want in my bank account at the end of the year? The second question is, how many homes do I need to sell to achieve my profit goal? And how can I minimize my expenses to maximize my net income? So when we think about those 3 questions, the first one is, how much money do I want in my bank account at the end of the year? That is, if you guys have set your goals, that's how much money do you want to make in real estate? And that was probably a question asked to you at the very beginning. And a lot of the times when we ask, the answer is $100,000. Great. What can $100,000 do for you in your life? And I would challenge you by saying, okay, great. If 100,000 is it, are you sure there's not more? We actually, in bold, there's an exercise that says, how much do you want to make? And it says, okay, double that. What would that do for your life? Double that again. Once you have a goal, and it could be $100,000, and that's great, then work it back from how many homes do you need to sell? And so that's where you have the flow of money, and then you switch it. So again, these questions, how many homes do I have to sell? For that's your income. How can I minimize expenses to maximize net income? And then what's your profit goal? And any expense, every month you should be evaluating what kind of return on my investment is this making me? It's so easy to see every shiny object and saying, oh, this is going to help me make money here and make money here. But no one ever tracks that. So if you're using some sort of lead generation, the easiest question when you talk to your clients is, how did you hear about me? And if they say, oh, I saw you on this ad that maybe you paid for, great. Then you know that is bringing you a return on your investment. If you're paying for this lead generation service and you haven't had a client come from that, then I would recommend reevaluating that lead generation service. Whenever the pandemic hit last year, KWRI called every market center and said, you have to look through every single line item of your expense and make sure it's justified. And that was really hard because sometimes you can't see a return right away. It may be 6 months down the road before you really even know. And they had this A, B, and C exercise. And if A was, I need this for my business, then it said, okay, reevaluate it in the next month to make sure you're still feeling that same way. B was, okay, I like this, it's beneficial. It said, okay, eliminate that in the next 48 hours. So it's great, you like it, but is it really providing a return? And then C was, yeah, this is just great. It helps alleviate a lot of it. It was like, nope, we're cutting expenses, eliminate it now. And so that's something that I've went through every month moving forward since the pandemic is evaluating our expenses as a market center. So that's something that you should do for your business to make sure that you're still getting the return you need on what you're spending. So when we talk about income, and we kind of went through this already with I definitely did jump ahead. Commission earned from closed transactions, listing income, sales income, referral income, and leasing income. Referral income is one of the most income opportunities that is undervalued. KW has such a big referral network that you can make connections everywhere, right? So let's say you want to go on vacation. And again, this is a tax CPA thing. But let's say you're going to go on vacation and there's a KW Market Center nearby. Did you know that if you go and work out of that KW Market Center and show that you've worked there, you can actually reduce that off your taxes by just going there? And while you're there, you can actually meet different agents there and build those referral network opportunities.
Okay, say it one more time.
So if I'm going to go to Florida, right? And I need to do some work down there. While I'm there, if I go to an office and I can show that I've worked and this was kind of a business expense, you can start to write some of that off.
Oh, really?
Yes. So there's certain parameters. So it can't just be, oh, I'm going there to work 2 hours. Again, I'm not a CPA, I'm not an accountant. I can't get you out of jail in that way. However, there are. So for instance, Mike Brown, him and Becky have different condos, right? Timeshares. And so whenever they go to one, they have their yearly owners meeting and they have minutes typed up and everything. And that's an expense that they can write off because they're going through and they're working for work purposes. So because KW has such a wide network, there's offices everywhere.
I know.
Yes.
I was in Cancun on May.
Yes.
And I was like, so actually, I'm going back in a couple of weeks, and I'm gonna meet up with an agent who works for KW because my brother has a house in Cancun. So I already contact one of the best top sellers in Cancun,
Yes.
and we've been talking, and I'm gonna meet up with her in a couple of weeks.
Yep.
I think that was
That's
amazing.
so cool.
Oh yes, I thought so too. I was like, because she's really good at it. Like,
Yeah. So while you're down there, then you find an accountant. What can you write off? So that is something. Yep. Any write off we can get, we'll take. So yeah. So definitely recommend doing that, and especially because it is also down there for a business purpose, and you can show that. So when you talk about referral income, that's a huge referral income that you can receive.
She told me she works for the referral as well. So we've
Yeah.
been talking, and my brother has the house. He put it in a business for like a couple months, and they haven't really have any movements. It's with a different broker. So
Gotcha.
when I was driving around, I was like, hold on. I told myself, there's KW here. Like, so I started like digging a little bit more. And yes, I find her through actually to the command.
Yes, that is so cool.
We got in contact. She speaks 6 different languages. She's not Mexican, but she's one of the top on Cancun. So that's why I was like, hold on, I want to
That is so cool.
It is. I thought it was so cool.
I love that. You'll have to get a picture when you're down there and like make a big social media post about that. That's so cool. That's so cool. So that's a perfect example when you talk about referral income and what you can do for your business. So definitely would keep all your receipts and kind of have that together. What I do in my email folder is I create a folder that says like 2021 taxes. And so any email I think that's going to be a potential tax write-off or a need for taxes, I just go ahead and file it there. That way, when it comes tax time, I have all of it in that email folder and I can print it off or give it to my accountant. So it's just, I don't want to have to worry about keeping it somewhere. So I just put it in a folder. I'm also really weird. I don't delete any emails. I file them all away. So I can always go back and look at them. So I don't know if that's a good thing or a bad thing. Okay, so when we talk about cost of sales, the costs related to each transaction you make, the cost of making a sale. So again, company dollar royalty, commissions or splits paid to employees or people involved in the sales, and referral fees. So just like that profit and loss I had listed out, that's what it would be. And again, the biggest thing through MREA is just going through everything that I got for that Excel sheet or everything that they've got through these classes is from the MREA. So get one, write it up. It's like the real estate Bible. So any questions on cost of sales? I know this can kind of be a tricky one. It's just a difference of understanding if it's per the transaction. And then another one is, do you guys understand CAP? I know that sometimes that's a hard conversation or a weird conversation. But if you guys if you don't understand, please come see me and I would be happy to walk through it a little bit more. It's a different model. So digging into the cost of sales, yikes, that's blurry. Okay. You have not yet capped on company dollar or royalty. What is the net commission check you will receive after company dollar? So this breaks out the formula of gross commission income minus your company dollar minus your royalty equals your net commission. So you can work your way through there. If you want an example, we could break it out. An easier way is take your gross commission income, and if you haven't capped, times it by 64%, and that's what your check will be. Up until you cap, then it's 100%, right? So if you take 64-36, so when we see our GCI is 30% and our royalty is 6%, that's a total of 36% coming out of your check. So your portion is 64%. So whatever your closing check is times 64%, that's the net check you should be expecting to receive. You've already capped on royalty and not capped on company dollar. What is the net commission check you'll receive after the cost of sales? So whenever we talk about cap and royalty, you will normally cap on royalty before you cap on company dollar, normally by like 2 transactions. So as you see your commission check maybe growing a little bit, you're like, oh, okay, did I cap? You can always ask Landon and myself. Landon's great at tracking all of that. And then you can expect probably a transaction or 2 after you cap on royalty, you'll cap on company dollar. And then you capped on both. What is the net commission check you'll receive after your cost of sale? 100%. That's the beauty of the capping model. Okay, so building your future. This is the best part. Okay, I'm so excited. Okay, so this is an activity and it says plan for your future. The activity we're about to complete will help you determine how you'll achieve your profit goal. We'll be working backward from profit to determine your activities and your budget. If you guys have a calculator on your phone, this is what we'll go through, and then we'll kind of discuss what we're discovering. So on page 10 of your guide, we'll follow along to complete the activity, which will give you an outline for your business plan built off your profit goal. So we want to write down our net profit goal. Do you guys have a net profit goal you would like to make, or how much you want to take home in a year? Have you guys thought about this yet? Cool. Okay, there we go, right? The generic one. And again, I love it. Yep. Love it. Okay. So for you, write down your net profit goal, what you want to take home, whether it be 100,000, whether it be 50,000, whether it be $1 million, whatever it is, write it down. This is your business and you can build it as big as you want, because again, the purpose of business is to fund your perfect life. So then we're going to calculate our gross profit. So again, I've seen anywhere between 25% is normally the average. Going up to 40 is normally very like $1 million producing. So if your goal was million, then maybe go ahead and say 40%. So it says take that times your profit goal. So it says divide net profit by 60%. That's assuming that 40% is going to taxes. So if it's less, let's say you're booking 25 for taxes, and it'd be 75%. So this is basing it off of the 40%. So your gross net profit goal is $166,666. You would have thought they would have did something different with that. So then we're going to go with our gross commission income. So calculate your gross commission income you need to attain your gross profit goal. The formula to calculate your gross commission income is to take your gross profit goal, and divide by 40% or 0.4. So then you're going to take your gross profit goal and divide by 40%. So in this, you need to have a gross commission income of $416,666 in this example, because it's accounting for 40%. So then the next thing we're going to do is we're going to calculate the number of homes you must sell to achieve your GCI. The formula for this is to divide your gross commission income by average commission income. So if we're wanting to go off the market center average commission income, it's $6,600. Yours could be more, it could be less, whatever you prefer. So take your GCI, which in this example, it's the $416,000, and divide by average commission income. So whatever your average sales price is. In this one, this led to 56 homes they had to sell. I'm curious, what is everybody's homes? How many homes does everyone have to sell right now? If I'm going too fast, let me know. Coffee's definitely kicking in. 27, love it. Yeah. Awesome, cool. And for those of you online, if you guys want to type in your homes sold in the chat, that'd be great too. So 27, that's awesome. Yeah, yeah. 27. And then when you break that down, I mean, little over 2 homes a month you have to close on. Love it. Okay. So then next we're going to go to the anticipated cost of sale. So what is your royalty and cap? So again, that would be $20,000-$30,000 total. And then we are going to calculate our operating expenses. The MREA budget models recommends we reserve 30% of our gross commission income to cover operating expenses. So then you're going to multiply your gross commission income, which in this example, it's 416,000, and you're going to multiply it by 0.3. And that is going to be your operating expense budget. So when you look at the numbers on your piece of paper, your net and profit gross goal, what do you guys think about those numbers? Any ahas after you calculated it? Every October we host a business planning clinic, and it goes over all of the MREA models. So we'll have a lead gen model, we'll have a economic model, which is breaking down essentially what we have done as our economic, and then a budget model. And so you'll be able, and this is great for especially teams and individuals because your team can come, and then all together you can take it and say, okay, what is our goal for the year? What am I responsible for? As an individual, what is my goal and how do I work back? Because when we think about it, if we start planning in January, we're already behind, right? Because when you go under contract on a home, it doesn't close for another 30, 45 days. So if you start in January, you're already getting behind goal. But in October, when you start, you say, okay, this is what I need. So the activities I'm doing now are going to show up 90 days from now. So already pre-planning that. So whenever we have that, highly encourage you guys to join. It's one of my favorite classes. Then we talk about best practices. First, we need to gain clarity, right? We don't know what we don't know. And so if we're wanting, the reason we got into real estate is either time or money, right? You want the flexibility of being able to create your own schedule, or the money aspect of you want to be able to earn as much as you want. And also you don't want anybody to boss you around too. Which is such an interesting industry. So is it time or money? And if it's time, great. How can you, in your time, be more effective so then you can have the other time doing the things you enjoy? If it's money, what kind of money are you wanting to make? And what are you going to do with that money? So then once you have an idea of what that is, let's set up your personal and business budgets. Then we'll set up your business entity. If you guys have questions on how to create an LLC, please come and let me know and I'd be happy to show you. You can hire it out for an attorney and it's about $250 probably. However, if you want to just do it on your own, it's pretty easy to do. Then, yes, of course. That's a great question. Yeah. So yeah, Shane asked, is this something you do before you have your first sale of setting up your business entity? If you have the time, great. If you've already closed on your first home and you haven't done it, don't stress about it. Because you can always tell your accountant this is how much, because all of it's going to be written, the commission checks. So when we 1099 you, it's going to be 1099 to you. So therefore, if you haven't set up your bank accounts yet, you can just let your accountant know, and this is how much money went to my personal account versus the business. So don't stress about it, but it is something I strongly recommend doing for an LLC to reduce that liability for the business. And to run your business like a business.
That I did open checking accounts. Brian showed me, so I am every time that I get, it goes to one account and then I just split what goes to my taxes,
Cool.
all that, and what's in my personal. I only have two different. So everything like my monthly payment.
Yep.
KW and all those payments.
And then, so once you get that set up and you come to Landon or myself and say, hey, I need to update where my checks are getting deposited to for direct deposit, we can deposit it straight into your business account. So you don't have to transfer it. Your agent billing, here's my new business credit card. I want to update that. So my monthlies are ran on that with that and the board, all of that. So yeah, so that's perfect. You just go ahead and start opening up the accounts. Once you get the LLC, you can start it in that. Whenever you create your LLC, then you can go and create a tax EIN number. And so then that's just the information that you'll give the bank to start. And being your own person in your business, like if you're not sharing it, you have to create an operating agreement. Well, it's super easy to do, right? If I'm going to give myself 100% of the profits, and if I decide to separate, then I'm going to collect 100% of these that's in the business. And it's super basic and easy. There's actually like if you type in like operating agreement, you can create one and do a free trial and essentially create one for yourself for free and then just end the free trial. So super easy, but I can definitely walk you through that. And there's other people here that can walk you through. So if you haven't done it, it's okay. Just something to consider for the future. So it's a great question. Then when we talk about additional bank accounts for taxes, expenses, other savings, download and use the MREA chart accounts. So when we listed the expense accounts, these are all listed also in the MREA. So salaries, legion, occupancy, which rent, technology, phone, supplies, education and dues, equipment, auto insurance. Super basic. Just start there. You don't have to overcomplicate it. And it doesn't have to be, oh, does it go into this one or this one? At least you're accounting for it somewhere. Just work on that. Purchase and download tax accounting software. So if you can use QuickBooks, it's a very basic one you can use, very easy to use, and then it also tracks your mileage. I forgot QuickBooks did that, so thank you for reminding me. And then hire a CPA or an accountant, and then an attorney. An attorney is not a right-of-way thing. It just depends on the state. Some are attorney closing states. Ours is title company. But it's always great to have connections to an attorney in case you ever have legal questions. And then set dates to calculate and pay your estimated taxes. So once you set up with your accountant or CPA, again, recommend paying quarterly and saying they'll literally print you off 4 slips and say, okay, these are the dates they're due. Just write a check and put it with a slip and mail it off. Mike, I know Mike and myself, we do it. And so we've added that into the team meeting, like today, quarterlies are due, be prepared. And so you're just sending that off. A hack for that is if you can't send it off that day, just get the envelope stamped for that day. So then if you need to send it in a couple days later, it's already stamped with that date. So probably shouldn't have said that, but just a thought. They're really not going to invite me back to teach this kind of stuff. Prepare for your future insurance, saving, investments. So what are you wanting to do? I know a lot of us get into real estate. And after we've had a couple transactions or met with a couple of clients, we're like, okay, this isn't maybe a forever thing. Like I don't want to sell real estate for the rest of my life. So how can I build up my life and my business so I can create passive income opportunities? So a way to earn more money without having to do a lot of it. So the first one may be rentals. Do you want to invest in a rental property and earn income that way? Really very scary at first. I will admit, it took me 2 years before I purchased my first one, but it's addictive. So I'm sure Tim is going through all that right now, which it's super exciting. And yet with the right people that you can learn from and the right systems in place, it can be very easy. Knock on wood, haven't really had a lot of problems on mine. I did get a letter from the city saying that one of them hadn't mowed in time and they were going to fine them. So that was a first. But it's just little things like that. And you learn that you can get through it. So with the right people. And then other investments, it could be a profit share, right? KW is awesome for profit share that you can bring people into your downline and you can receive profit share. You can even do growth share. So growth share is outside of the US. So Cancun, perfect example. You can talk about KW, say how you love it. And if they join that KW office, you can also be a sponsor for them and you would receive growth share. The reason it's a difference between profit share and growth share, it's calculated a little bit differently, but you can still receive those opportunities. And there's, I can't remember how many countries that they're a part of it now. However, if you are frequently a flyer to a country and there's not a KW office, you can actually bring it to KW Worldwide's attention and saying, hey, have you thought about this country? And we actually have people that have found the person that started that KW in that country. And then everybody else that they brought in just came in their downline. So It's always an opportunity. The daily success habits. So ahas to achievement. So the goal of our time is together is to help you think, feel, act, and use what you learn to ignite your passion and help you achieve your big why. Have you guys ever been through a class yet to talk about your big why and why you're in business or why you're doing what you're doing? Yeah? Okay, cool. I think that's probably the first session. And if you don't know what is your big why, that's okay. I think KW is my thinking when I joined KW is completely different than my thinking and my goals for myself now. Whenever you come into KW, it can be very overwhelming because you're able and you have the opportunity to be around such high-minded thinkers all the time that sometimes it can be overwhelming of, oh, well, they're at that level. How could I ever get to there? Yet they always started out at some point to get where they are. And your why is different than everybody else's why. I went to a class once and they talked about your big why. And I was like, well, I have no idea. I mean, at the time I was 24. I was like, I don't know. But over time, going through different training classes and having different experiences, for me, my big why a year and a half ago or 2 years ago when I decided I wanted to get investment properties was to say yes to every opportunity that came my way. So I knew that I've done everything I could for my future, and not just for my future, but create a legacy for my future families. So any opportunity that comes my way, it's always a yes. And then it's okay. Once I say yes, is then I get to evaluate, right? I never want to say no to an opportunity because I don't know where it's going to lead. And then that's where it's taken. And it's like, okay, in 5 years, I want to have this many investment properties because I want to make this much money passively. Because a big thing for me was my dad was an over the road truck driver. So it's just my mom and I during the week. And now that I think about how she was able to work and be at all of my activities, it was like, how in the world did she ever do that? So I never want to have to choose between being at work or being where I want to be. And so being able to create passive income so I have the opportunity to say yes to the specific opportunities or put my feet where I want my feet to be, that was huge for me. Yeah. So you may not know. And your why could be your spouse, your children. And it doesn't have to be your spouse and your children, and that's okay, right? You have the opportunity or permission to make it about something else as well. And that's completely okay. But it's what drives you, what fills your bucket, and what makes you get up every day. So when we talk about creating your why, it's again, the purpose of business is to fund your perfect life. So what does your perfect life look like? Brindley Tucker, who used to be a MAPS coach and she has her own company now. Her big why is she wants to spend her summers in Washington and her winters in Florida. And she's been able to create a life that she's able to do that. So what does your life look like? Do you want to stay in Springfield all the time? Do you want to have the opportunity that you create a business where you can vacation 48 year or weeks out of the year and the others you're actually spent here in Springfield? You can do whatever you want, right? It's creating a plan and then finding an accountability partner to help keep you going on that plan. And it starts with conversations, right? You're the sum of the 5 people around that you spend your most time with. And sometimes those conversations are hard because maybe that 5th person isn't somebody that's benefiting your life. And maybe you're having to say no to them to add someone else. So who are you spending your time around and what kind of impact are they making on your life? And you have the right to change those 5 people. And those 5 people probably will change, right? As you grow and develop, what you're needing in this season of life may be different in this other season of life. So finding those right people. So as you go through Ignite and you go through this journey of real estate, how has your thinking changed? And what ideas and mindsets were new? Again, at the very beginning, I just want to master being a real estate agent. And then from that, once I feel like I have the foundation I need, what's next? And then what do you feel differently about and what was meaningful to you? How will your behaviors be different going forward? And what actions will you take going forward? And what tools, models, or systems will you definitely use and how will you make them accountable? So when we talk about leverage, it's a system, tool, and then a person. So when in your business, you should always be evaluating this. Do I have the right systems in place? Do I have the right tools in place? And then do I need to bring someone else on to help me get more time to do the things that I need to do? And I think you maybe have heard it or maybe it's in here, but you talk about in KW, you're 20%, where when we talk about Pareto's principle, 20% of our activities bring 80% of our results. So the 5 main roles of a real estate agent is to lead generate, lead follow up, negotiate contracts, go on listing appointments, negotiate contracts, and scripts and role play. And if those aren't your 5 main duties and you're doing everything else, then you're not doing those dollar producing activities to move you forward. So maybe you don't have the right systems in place. Maybe you don't have the right tools that you need. And a tool would be more of like a program, right? So you may have a system in place like a checklist, but a tool is a QuickBooks, right? It's helping you, that tool is helping you track your mileage. And then you have a person to do it. So these are your 5 main roles in your 20%. And then evaluating where you're spending your other time in. So I would love to hear any ahas you guys have had from what we have talked about so far. And I'm very sorry because I've flown through this and I knew I was going to. I have I have a couple more pages and a lot of it is scripts and role play, and we'll kind of talk about that. But I would love to hear kind of an aha that we have talked about so far that you guys have taken away. Okay, open a business account. I love that. Yeah. And it's super easy to do, right? It can be at the bank you're currently at or a different bank and setting up an LLC. And it's nothing scary, right? Congratulations, you're already a business owner. So let's run our business like a business. Love that. Anybody else? Yeah. Opening up a business account. Yep. And even for Tish, with her Mockingbird Designs, does she have a business account for that and just operating that like a business? Yeah, that's exciting. I love it. And if you guys want the copy of my Excel sheet, you're more than welcome to have it. Just email me and I'll send it over to you. And you can make it whatever works for you and you don't have to use it at all. But if you would like it, great. More tools, the better, right? Anybody else? Yes, Aaron.
Just
Yes.
which is not a lot of times when you're doing
Yep.
but like even if your profit is 0, in the last
Yes.
down the road.
Love that.
And the answer is to
Oh, wow.
it's a I have access to hot water, but like we don't it's not like super easy.
I'm not taking cold showers every day.
Cold showers every day, but like portable one. Money on that. I
Yep.
would rather
Yep.
make it work and trying not to
Yeah. Yeah. I love that. I love that so much. Yeah. So when we talk about the importance of a profit and loss, and the first thing is gaining clarity, right? And it may think, wow, I'm making all this money and I'm doing really great. But once you start tracking it, then you can really see, okay, am I nailing this? Or are there areas for opportunity for improvement? And so just always evaluating that. And that's why we, as a market center, we transmit our data every month, right? We're able to course correct along the way. Same way, whenever you set goals, it's okay, how do I look at these monthly, weekly, daily to make sure I'm on track to achieve what I'm wanting to achieve, and applying that to your personal life as well. I mean, I don't know how many of you, and maybe it's just me, but when I get my credit card bill and I'm thinking, wow, Rachel, how many times did you really have to eat out? Or, things like that. It's just, okay, can I do better? And can I use that money when you think about it? For something else. So when I was really dialing down on saving money for an investment property, it was okay. I'm going to go ahead and send this money into a separate account. So it's already out. And so I don't think I have the opportunity to just spend it kind of thing. And another thing, whenever we're talking about saving money, outside of a checking and a savings, there's also a thing called a money market. So I have a financial advisor and they have a money market account where I put money in there, and Again, it's not a lot of interest, but it's higher than a checking account interest you would receive. So if I'm thinking I want this money to go in and I'm not going to spend it for a year, I'm going to put it in a higher interest account so I can make it work a little bit harder. So if you have a financial advisor, that's another opportunity for you as well, is to how can you make your money work harder than you actually can? Because in a checking account, you get zero return from it. So how can you make it a little bit more? I love that. That's great. That's so good. Anybody else? Yeah. Yeah. Hmm? Uh-huh. Yep. Yeah. Yes. So you can, I love that. So I pay everything on my credit card because I'm trying to get the most points possible, cash back, reward miles. I'd love to earn a free trip. It's not really free because I spent it, but in my mind, it's like, I got a free trip. Woo! It's a little thing. So yeah, you can definitely open up a business credit card. For the market center, that's what we do. We don't use like a checking or a banking card for anything. We use a credit card and we earn flight miles for it. So whenever we get to travel again, then it's paying for our flights that we've already used on our expenses. So definitely a great way to think of it. Yeah. Yeah. Yes. Best credit card recommended. That's a great question. Yeah, I think it really does. And some of those, again, it depends because you're opening up in a business account, even though your name's on it, you may not get as certain cards you may not be able to get since it's for a business, not that. We have a Capital One venture card. That's where we get our flight miles from for the market center. Uh, yeah. For my personal, I have a Discover and I have a Chase Sapphire, and I just opened up the Chase Sapphire because they had a really great. If you opened it, you got and spent a certain amount of money, you got this many flight miles in it. So I'm going through a home remodel, and I'm like, okay, if we're gonna spend this money, then let me get something out of it, kind of thing. But I mean, a Discover, and I think anything. It's just what Aaron said. What is a value to you? Yeah. And like with the Discover, it's certain quarters or different categories. So it's not on everything. So I maybe wouldn't recommend that for a business expense. It would probably be more of whatever you spend, you get that back. Yeah. 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 That's a great question. Love it. Okay. So when we talk about this, and again, I'm sorry, Nicole, I'm going to kind of buzz through this, but goals to set your career on fire. So just like in every Ignite class, it's 10 contacts added, 10 conversations a day, 10 handwritten notes, and 10 home previews per week. The biggest thing, and when they talk about a database, I've heard Jason Abrams call it a data bank, which I love, right? Because the fortune is in the follow-up, and however many people you have in your database and you're able to follow up with them systematically through the use of smart plans or task, it will keep you top of mind of awareness for that. So whenever you enter a contact in command, it tells you what your database health score is. So again, basic information. If I only know their name or phone number, how can I get in contact with them to get more information to increase my health score on that? Scripts. So why is it important to learn, internalize, and personalize scripts? I have a love-hate relationship with scripts because I'm the kind of person I want to be able to connect with those people. I don't want to seem like I'm a recording. I don't want to seem like I'm reading it word for word if it's not natural. So, and anytime you ever look at scripts, it's okay to take it and change it, right? It gives you a guideline of what to say. And yet, if it's not going to seem natural to your client, then don't do it. It's going to come off very salesy, and some people are great at cold calling. I'm the kind of person I want to create a relationship with them. I want to ask 2 questions further so I can create a deeper relationship so it's not surface level. So if you use scripts, I think they're a very valuable tool to give you an idea, and yet you should customize them and make them your own. So when we talk about scripts, there's lead generation scripts, finding your client's motivations, identifying objectives, closing deals, speak in terms the customer understands, and build confidence. So whenever we have bold coming around, I highly recommend taking bold. It's a lot of scripts and making your own, but then how to talk with your clients in that way. Um, so just figuring out, and then on KW Connect, if you search scripts, there's like buyer scripts, seller scripts, and just I think like lead generation scripts too. They're 150 pages full of scripts, and you can make them your own. So whenever, again, anytime you make calls, the compliance do not call list, making sure that they're not on that registry before you do call them. I'm sure if you guys been to team meeting, you've heard us talk about it. CYA, cover your butt, but make sure you're doing that. The lawsuits are increasing, and that's an easy thing for an attorney to go after. So, yep, yep, yep. Okay, so we're gonna skip all the way to your success list. Boop, 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 boop. Okay. So the 10-4 activity that we've talked about. So when we talk about a success list, it's to do, should do, a priority, and a task. You go through and you write and create a list of tasks they need to complete related to the Ignite session today. So if it is, I need to open up a business bank account, or I need to create an LLC, I would love for you guys to just kind of make a list of the important things you took from today and writing those down. And realizing, okay, these are the things I want to get done. To do, should do, priority, and then this is a task. Because if it's not written down, it's going to be easy to forget later on. So just going through and making that list out. I don't know what you guys use to keep yourself on track. There is a thing called a 411 within KW, again, another KW term, and it talks about 1 year, 1 month, 4 weeks. And it's a 1-page reference sheet of this is our 1 year goal. So if my 1 year goal is to close 27 homes, I'm going to break it down this month. So this month I need to close at least 3 homes, but also thinking ahead, how many appointments do I need to go on? How many consults do I need to have in your monthly goals? And those monthly goals, it's not a to-do list. It's what are the 3 to 5 things that I need to do this month in order to move the business forward. And then you can prioritize what are those I need to do it in this order, in this order, in this order to make the most sense to move it forward. And then every week it's if I need to go on 10 appointments, then I need to break it out. How many per week do I need to go on? So let's say easy math, because you can't do point appointments. It's 3 appointments a week. If I only went on 2 appointments, then I'm going to move that 1 appointment I didn't do to the next week. So instead of 3 appointments for the next week, I need to go on 4. You've earned the right to keep moving it forward. If you don't get it done, it just moves to the next week. So then it gives you an idea of if I said that these activities are going to move my business forward, I need to make sure I'm doing them on a weekly basis in order to, for the monthly basis, and in order to hit my year goal. That can be found on KW Connect, super easy. It's one of the best tools I've used for myself personally. In the spirit of real estate and the whirlwind you can get involved, it's very easy to get distracted with shiny objects here or there. And this helps me keep myself on track, making sure that I can look at it at the end of the day. And it can also be an overwhelming feeling, right? At the end of the day, you get home and you're like, man, did I do anything today? What did I do? So that's something that I reference and say, okay, I was able to knock this out. I feel good about that I'm actually accomplished something instead of feeling like I haven't accomplished anything. So definitely recommend making a success list as you go forward. Other than that, do you guys have any questions, thoughts, or comments about it? Yes, Aaron.
Well, the call list has been pushed, which
Uh-huh.
is extremely important. I also kind of wanted to mention have a house that's listed
Uh-huh.
if they're working with an agent.
Okay.
By people who are saying agent, which was me.
Mm-hmm.
And then I got called again by somebody.
Mm.
That was a little irritating. to
Yep,
me because
I would agree.
It would have taken like
To look at it.
if you're looking at it.
Yeah,
So I just,
that's a great insight. Yeah,
make sure that
taking it a
you're-
step further. Mm-hmm. Yep, that's a great point of, and that, yeah, because just because they're on the do not call list, that's one step, right? But I've heard so many times that if you would just check the MLS, especially in this market when things are changing all the time, to see if it's under contract or not. Yeah, I'd be interested once you said that, they'd be like, oh, okay,
Pretty much.
Yep.
And it was kind of like this, you could like see people backtracking.
go, go,
you
go,
know,
back up, back up, back up.
you know.
That's
It
funny.
was a good call and like they did a good job.
Uh-huh.
Thanks for taking my call.
Yeah.
But
Are you looking to buy or
are
sell?
you looking at this?
One business day. Mhm. Yep. It used to be 3 and now they've changed it to 1. So for instance, you'll see a lot of homes say, oh, because like the coming soon, right? It has to be, if you advertise it coming soon, it has to be on the MLS within 1 business day. You'll see a lot of agents say coming soon on like a Friday, because technically they don't have to put it on until Monday. So that's where and if you're trying to advertise it a little bit more, you have that weekend. So that's where you're seeing it a lot. But 1 business day, and be careful because you will get fined. And those penalties, every time it happens on the same penalty, it increases up to a max. So make sure you definitely want to check it out. And they've changed it too now, where you have to have the seller's disclosures and like a lead-based paint, all of that uploaded within the next day too. Because a lot of the times people are making it live, but they weren't including the forms. So they've made that also a guideline as well. Yeah. Yeah. Mm-hmm. Yeah. Um, I mean, that's a conversation and you could literally say, per the board, this is the rule. Yeah. Yeah. Then that's a board call and then the board would fine them. Because right now it's important to know that, right? And especially whenever you're putting in your offer saying you're going to get them, but then you're doing other things in your offer to essentially make it harder for you to get out of the contract, like even the property data review. And if it's 0, then you can't walk away, right? So that would be super important. If they're not following, then that's a GSBOR and they'll just fine them. Yeah. And you have to do it within, you have to do it within a day. And so just making sure that they're all up there. So yeah, if they're not doing it and you've had the conversations and said the board, this is the guideline, then just let the board know. No one wants to be that person, but again, it's like, I am asking and I need it. So yeah, it's just one of those things that's unfortunate. Unless, because even if Jim, like you went and told Jim or Don, they would still say, they would call them and say the same exact thing that you're saying, like, hey, you have to do this. So it's not really. Mhm. Yes, it is. Yeah. Yep. Yep. Aha. There we go. Right. Yep. I love it. Awesome. Well, thank you guys so much for coming today. I hope you guys have had some time back in your day. And if you have any questions and if you want to sit down and schedule an appointment to go over it a little bit more, I'd be more than happy to. This is something that I love talking about and helping agents set their business up like a business, because I believe that it will truly change your life to do it that way. So thank you guys.